5, 4, 3, 2, 1.
Good afternoon. My name is Jim Eskin. On behalf of Eskin Fundraising Training, it is my privilege and joy to bring you episode number 35 in our nonprofit, a webinar series. I think this topic is relatively fiercely important to every nonprofit out there. It's financial fitness. She's going to get a fuller introduction in a second, but I'd like to welcome Whitney Solcher, who is a good friend and knows more about money than just about anyone I know. She has several titles. If I get this right, Whitney, she's the Chief Investment Officer, Partner, and Senior Consultant with Outreach Investment Consultants. So we've worked together on an investments committee. Thank you for sharing the most precious gift of all your time. Let me ask a miscellaneous question. You come from a very large family. How is your family doing? Are they safe?
My family is good. Everybody is luckily safe and sound, and we haven't had any COVID issues so far. So we had a nice, quiet Thanksgiving. We normally are about 40 or 50 people, and we were only 15 this year. So we toned it down a bit.
Well, I'm glad to hear you all are safe. We're trying to do something, by the way, we have 3 objectives today. What are sound financial management practices? How can you stretch your dollars? And how can you plan for 2021? Before we blink our eyes, it will be here. And we want to turn to the audience. What else do you want to know from our webinar this afternoon? When it's over at 5 o'clock and maybe you're going to happy hour, what would you like to know that you don't know now? Sandy Holt.
Thanks, Jim. And it's a pleasure to be on here today. And thank you so much for our presenter today, because this is very important information. There are actually 2 things that I would like to know. The first one is, what would you recommend are best practices and or policy around maintaining reserves in order to sustain a nonprofit during a crisis such as COVID? And then my second thoughts, or what I would like to also know or get advice on, is what advice would you give to nonprofits as far as their 990 is concerned to ensure positive observations by prospective donors?
Very good. By the way, Sandy, and for our learning community audience, Whitney and I have made a deal. If the question is ridiculously easy, I will answer it. If it is more than ridiculously easy and challenging, she will answer it. So that's our deal. And we'd like to start with a thought. This is from one of our heroes, Melinda Gates, who's become kind of the spokesperson for the Gates family. And she makes the big point, now they have given gazillions dollars, but she talks about it's money and time. And that if you're Bill and Melinda Gates, you can do it. If you're Whitney Solcher, you can do it. If you're Jim Essen, you can do it. If you're John Largent, you can do it. And by the way, I'd like to introduce our producer, John Largent, who's CEO of Game Day Media. John, could you share how people can indicate a question either by typing it in the chat space, or better yet, we want to make stars of them and we'll bring them on camera.
Yes, thank you, Jim. If you're interested in asking a question for Whitney, there's a place in the participants area where you can actually raise your hand. And when the question and answer session starts, I will actually send you a permission to allow your screen to be on and your microphone to be on, and you'll be on camera to ask your questions and give any feedback. Thanks, Jim.
Right. Thank you, John. A point of background, after a very satisfying career in higher education advancement in June of 2018, Andrea and I launched Eskin Fundraising Training. And Whitney, one of the things we discovered, I had the privilege of working with an incredible group of community and business leaders who are absolutely, whoops, can't use my hands that much, absolutely fearless in everything they do except asking for a gift. And what do we know about fear? Most of fear is based on the unknown. So we declared war on the fear of asking for the gifts, and our job is to demystify the art and science of fundraising. In our audience, we have staff, we have volunteers, we got board members, we got executive directors, and we have donors. And we want to say we like you guys. You're all heroes. You were heroes before COVID, and now after COVID, you're even more heroic. And we like to say that we can take anyone with the Jeffersonian values of a knowing head, an honest heart, and we can turn you into a fundraiser. We've begun, I'm excited to plan our series for the winter, and soon it'll be 2021. We're going almost like, it's going to vary. Sometimes we'll skip a week, but everyone, our deal is our webinars are on Wednesdays, 4 to 5 Central Time, and we love that we're picking up people from other parts of the country. You will always get an invitation Friday before that Wednesday and have several days to enroll. We're going to send out afterwards, we're going to send out a quick summary of this that we'll post on LinkedIn and Facebook. And then we're going to send out the slides and the recording of this that we hope to post on LinkedIn and Facebook somewhere between 6 and 6:30. And that also, if you're not on our mailing list, we want you there. There'll be this PDF slide, click on it, and it will take you to a sign up, and you receive our monthly newsletter and invitations to the webinar. I was proud to write my first book last year, 10 Simple Fundraising Lessons. And today's about financial fitness. I got to tell you, it's nothing new that nonprofits have been financially challenged, but we really haven't seen something like this, because this is a perfect storm. At the same time that their needs and demands are rising, their resources, be it government or private money, is being challenged. So we like to say, if you're an executive director or board chair, you're no stranger to financial pressure. And you probably were stretching nickels into dimes, and now you have to stretch those nickels into quarters. So you got even more of a challenge. Something we want to say that philanthropy is remarkably historically resilient. In fact, it's actually reacting more robustly to COVID than the recession of 08, 09. And part of the great signs are, and I'm going to ask her a quick question right now. The stock market is by far the strongest indicator of philanthropy. And I'm just amazed how the stock market is doing. Whitney, if you called me 1 year ago today, okay, and you said, Jim, can you put together $10,000? And I said, I think I can put together $10,000. And you told me, why don't you invest in Zoom? And if I had taken your advice, what would that $10,000 be worth today?
Well, first of all, I would have looked like a genius, and I wish I had done it myself. But you would have made almost 6 times your money. So that 10,000 would equal about $58,000 today.
Not a bad return on investment. And
Not too bad.
And the point is too, if Whitney had called me, I would have said, I've never heard of Zoom. It sounds kind of cocky. Find somebody else. By the way, we point out that we love corporations and foundations, but the lion's share of philanthropy comes from individuals. And I always tell my clients and my webinar audience, sure, go after foundations and corporations, but the fish are really biting. And this has been held up for the last 60 years. Individuals account for about 70% of the money that comes into American philanthropy, which last year was $450 billion. This will show you where it's going. This hasn't changed too much Faith gets the largest chunk, followed by education, and then it's really split into little pieces. That hasn't changed too much. There are 1.5 million nonprofits in the country. Whitney, there are 100,000 in the state of Texas. And I know you're curious, there are 6,000 in the greater San Antonio area. And that puts the donors in a tough position. They're not choosing between the good and the bad. They have to choose between the good and the good. And the reality is, to most of those nonprofits, they're pretty small. You see 88% have revenues, under $500,000. So, and the greatest asset that nonprofits have is their passion. And we like to talk about the science and art. You basically can break fundraising into 4 distinct parts. Number 1 is identifying your prospects. Number 2 is forging a personal and emotional relationship. So number 3, there will be the imposition of to respond favorably. And solicitation, it's the who, the what, the where, the how much, and the when to ask. And finally, a very important component is stewardship. And the rule of thumb is that you should thank every donor, whether their gift's $100 or $1 million, 7 times during the year, because we're going to go back to that donor and we're going to ask them to give again and ask them to give more. We have a little tradition. This is our mantra, nonprofit strong, and we like to ask everybody in the audience to type in those words, nonprofit strong. And Whitney, what are we?
Nonprofit strong.
You bet we are. It is now a pleasure to introduce Whitney Soltra, who is Chartered Financial Advisor. She is the Chief Investment Officer, a partner, and a senior consultant with Ulrich Investment Consultants. And she has expertise in just about everything: fiduciary wealth, advisory services to institutions, foundations, endowments. She works with the nonprofit sector, family office, high net individuals, and I could go on and on. She also is no stranger to the nonprofit community. Whitney, I don't know if I can keep up, but she has served on the board of St. Mary's Hall, the San Antonio Area Foundation. She served with me when I was at the Alma Colleges Foundation, the Whitty Museum, Trinity, the Greater Chamber, and the Texas Biomedical Research Institute. Thank you for your service to the community. Did I get them all?
My pleasure. We're probably missing a few, but that's okay.
Yeah. Let's see. Tell you what Sandy wanted, let's move that up. Sandy, let's see, had 2 questions. And one was how to develop reserves. Let's start there.
Yeah, so best practices over reserves. It's a really good place to start and kind of thinking about the new year and budgeting. And it's very similar in a way to private clients in that, we really want them to have sort of 3 to 4 months in essentially their expenses saved up in savings, ready to go in case, any obviously bumps along the road come. And it's very similar for foundations and non-for-profits, is that you really want to strive to have 3 to 6 months of an operating reserve built up. We realize that's, probably daunting for many institutions, especially smaller ones. And so a good, best practice to have is that if you don't have that operating reserve built up at this point in time, make that part of your budget each month. So put a line item in there that is going to be saved to go into this operating reserve until you're able to build that 6-month bucket up.
Okay. I think I'm allowed to give you one question, and the others ain't going to be easy. Okay.
Okay.
I want to try with this one. There are so many people who claim expertise in the investment advisory area, including in-laws, by the way. What makes Ulrich different?
Yes, there's a lot of brother-in-laws out there, and there's a lot of vernacular and initials that can be quite confusing, but I would say the number one important thing to do is look for an independent fiduciary, and that is what we are. So most people get confused. Your stockbroker is not a fiduciary. The way they make money is they're selling something to you. And our job is, the way we see it, is we're really the architect of our clients' financial lives. So we're really constructing, what is the plan? What is the long-term goal? And how do we get there? And we're going to get there together. So not only do we need to know those long-term goals and sit on the same side of the table as our clients, but then it's also our job to then go out and find the best plumber, the best electrician, the best mill worker, which are all those pieces of the pie and the allocation of their portfolio that's really going to get us to that long-term goal.
Do me a favor, give a short definition of fiduciary.
Who did I favor?
No. Say, give a short definition of, do me a favor, of fiduciary.
Yeah, so a fiduciary is going to have the client's best interest in mind. And so that first and foremost comes first, and it's at the heart of what we do. We take actually on the fiduciary liability of the client. Whereas if you were to compare to a broker dealer in basically making a recommendation of a stock or a mutual fund, they're under a different rule of suitability. So suitability just means, can you take the risk or not? And essentially, if you have the money, you can take the risk. So there's not really the same level of duty there or care.
Hey, your easy questions are over. Okay, let's go to town.
Okay.
I can't believe the year we had in the stock market. It was a roller coaster. If you and I were talking in February that we thought 30,000 was going to be broken, we would ask what we were drinking or something, So a two-part question, and they get progressively harder. How do you explain the roller coaster ride of 2020? And this one is fun. What are you forecasting for 2021?
It's definitely been a Rip Van Winkle type of a year. I mean, if everybody had gone to bed in January on their kind of New Year's hangover and went to sleep and woke up today, they'd think that nothing ever happened and that we didn't have a global pandemic. But here we are. So the initial panic that we felt back in March, that was obviously sheer uncertainty. Nobody knew what was going to happen, and what markets hate the most is uncertainty. And as things became clearer and we were forced basically into our quarantine, what really drove the markets was what we're doing right now. Zoom. People are working from home, and technology has evolved so much that frankly many of our lives haven't changed that much, and we've been able to function, thank goodness for technology, and they've been the real beneficiary of this pandemic. The other thing that we've seen, and it's been a growing trend for a long time, but this has definitely pushed it more forward, is just changing consumer habits. So we're much more of the just-in-time, immediate gratification type of consumer, and that's only been escalated by being forced to stay at home. And so we're ordering from our Amazon Prime, and we want our Netflix, and we're going to binge that all evening after we've Zoomed all day. So those technology stocks, communication service stocks, things like Google and Twitter, et cetera, Netflix, those have really driven the stock market upwards. And it's only about 5 or 6 names that comprise roughly 25 to 30% of the S&P 500 index. So while the market itself has gone up, that index has gone up, not everyone has really participated. But if you owned an index fund or had just pure equity exposure, you have benefited. But there have been a lot of companies that are obviously hurt, have been left behind. Their earnings are crushed and have not recovered. Now, what we did see was a little bit of a pause in October, and technology actually took a breather there. And a lot of that was just build up to the other big thing that happened this year, which was the 2020 election. And again, markets don't like uncertainty. And so they were basically on hold until we had an outcome of the election, which we can talk a little bit about that later. Turned out to be just not really the big news. It was really the week later on Monday when we heard the announcement of the first vaccine. And then we've seen the stock market since then, further escalate and go forward. The difference that we've seen, though, is it hadn't necessarily been those same technology and communication stocks that have driven the more recent rally. What we're happy to see is actually more broader market participation. We've seen the cyclicals, the industrials, the materials, energy coming back, which has been crushed year to date. And so broader market participation is a sign of a healthier economy, and the fact that the market can actually see the light at the end of the tunnel, which, hopefully worst case scenario, we have everybody vaccinated by, midtime next year.
Yeah.
Oh, and you asked about the crystal ball.
Yeah.
So what happens?
That's right.
What happens in 2021? And I do wish I had a crystal ball, but we would say that our expectations are going to be more dampened. We do feel that the economy will continue to recover, and like we said, there's a lot of stocks that didn't participate in the original rally that we think are cheap and will continue to recover. But we probably won't see the indices jump as much as we have in 2020, because they're just really not going to be driven as much by the tech and communication services, which have really sort of already pulled those earnings forward and their valuations.
Mhm. Hey, let's go back to the election for a moment. Traditional thinking is that Wall Street prefers a divided government where the White House and the houses of Congress are in different hands of different parties. Now, if the Democrats win both seats in Georgia, we don't know, that's a what if, and take control of the Senate, will that have a negative impact on the market next year?
So you're exactly right in what you said about a balanced, government, and basically the market does like that. The market really likes stalemate or really for nothing to happen, because it allows companies to basically budget and plan with not a lot of changes, regulatory changes on the horizon. And really the only thing that we see potentially happening is more bipartisan agreements, which could be things like infrastructure, which is on the table for everybody and could help boost the economy. I do think that the market has already really priced in what's already happened. So the pollsters were wrong about a blue wave. We did not see a blue wave. We did not see a mandate of that kind, especially with the Republicans winning 10 seats in Congress. So even if Georgia does pick up the 2 seats on the Democratic side, we've got 2 independents there. And so the Republicans still lead with 50 against essentially 48. And I think that's where the market is priced in. So either way it goes, kind of leaves us in the same situation.
Right. Before I go to Sandy's second question, in my 30 years as a development officer or a vice president, I love gifts of stock. And I love, that some people think it's just for the very rich. But with stocks now at a high point, isn't this a great time for nonprofits to discuss making their gifts through stock rather than cash?
It's an absolutely great time. I mean, one, obviously we've seen the market rise, but I mean, if you are having a conversation with the donor and they've already agreed that they want to write you $1,000 check or a $10,000 check, by all means say, do you potentially have, stock that you would like to gift in kind instead, in order to basically save the taxes that donor would have to pay if they liquidated that stock to give you cash. It's a great estate planning tool, and especially we don't necessarily foresee taxes going up in 2021, but most certainly in 2022 and going forward, we would see these capital gains taxes start to rise, and so this becomes even more important. And there's also some talk about getting rid of or minimizing the step up in basis upon death. And so again, this becomes a good estate planning tool if somebody is charitably inclined. So instead of asking for $100, you basically can ask for 120 with in-kind stock.
Right. I think that's good advice for all you nonprofits, particularly year end, and a great time to talk about gifts of stock. Before we get to Sandy's question about 990s, I'd like to talk about, before we know it, 2021 is here. It's a new year. What are some good financial management habits to start the new year?
I mean, I think it's budgeting. I mean, getting back to budgeting for a surplus and making sure that you've got a healthy organization, as well as making sure that you're building up that reserve if you don't have one already, and making sure that you're optimizing that 3 to 6 months of cash in order in case we have any more bumps along the road. But making sure that essentially you're in a good sustainable place to start the year. It's like when everybody hits the gym in January, you can go there and it's completely full, but it's a good place to start, is start out with a financially and fiscally fit body for your organization.
Yeah. Let's move. Hey, Sandy Holt, are you still around? Can we, Sandy, can you come on the screen for a second? If not, we'll answer the question without her, but I'm going to give a second. John, do you see Sandy Holt? Or did she, if she find her, she probably brought a lobster roll back from Maine, is enjoying it. I'm trying to note exactly, the question was about 990s. Was it on?
I think advice regarding 990s, and I must admit, I'm not necessarily an accounting expert, but I think, one, having them actually posted in a timely basis so that donors have access to those financials. But in general, also is making sure that you've reviewed those 990s with your board or whether you have a specific financial finance committee or investment committee, but making sure that all of the board has received those 990s and reviewed them from a high level audit process. And obviously, if you have an accounting firm that can do an audit as well, we understand not every nonprofit can afford the audit process, but that's obviously very important.
Yeah, I know that you're right. It is a great internal teaching tool and a great external tool. I know in my gigs, we often posted it with GuideStar, and that's a way a lot of people, I can't tell you, they want to do some preliminary research. They check you out in GuideStar on your 990. So it is a great, and also too, I loved it as far as engaging the board, and everyone has a deep understanding of where we stand. Let's move on. What are the most essential financial benchmarks and indicators that nonprofits should be monitoring?
I think we mentioned the first one already, which is it really is budgeting to a surplus. I think a lot of nonprofits feel like they need to run their businesses different than a for-profit, and really they shouldn't. And it's a shame some donors actually see potentially a large cash reserve on hand. I think that's a bad thing when, in all honesty, they should have the same cash reserve that a for-profit should. Now, if the institution is, beneficial enough to have an endowment, then obviously we're talking about different benchmarks. So obviously you want to make sure that the underlying managers and asset classes are beating their respective benchmarks, but then also comparing your whole institution to similar peer groups of your size, similar institutions, and how are they performing versus you. But then first and foremost, also, if you do have an endowment, your number one benchmark is, are you meeting your spending policy?
Okay, Whitney, let's face it, this has been for many nonprofits, particularly those who depend on events. It's been a tough year, particularly those in the arts that depend on performance income. So again, no easy questions. What are your thoughts on the first steps a nonprofit that's getting in trouble can take to move in the direction of financial sustainability?
I'd say, first you've got to have buy-in from your board. You shouldn't have board members that aren't, adding value to the organization. I find that there's some institutions that go out there and ask people to be involved simply because they may have a fancy name in the community, but in all honesty, they don't have any buy-in to the actual foundation. So that's first and foremost, making sure that your board members are contributing through their corporation, or they're making introductions in the community and being your spokesperson and engaging you.
Hey, by the way, can you give me a fist bump? You said words I like to say. Give me a fist bump. That's what I believe. Okay, and I'm sorry to interrupt you. Okay.
No worries. But otherwise is making sure that you have the appropriate staff. So you really do need somebody who is dedicated as a fundraising professional for that organization, with some support staff. And if you don't have that, you're really in a pickle. But there are other foundations and grant making organizations out there that will actually give you seed money, like 3 years seed money, in order to put somebody like that into place if you qualify.
And will you say, for the record, I didn't pay you to say those words, but
No.
Those were music to my ears. I have several more questions ready for Whitney, but is anyone in the audience want to come on camera and ask a question? And before I finish my list?
Hi, Gene has a question, so I'm going to bring him on.
Okay, Gene, let's bring him on camera. Gene, how are you this afternoon?
All right, doing all right. Can you hear me?
Can I pick on Gene a little? He went to that school, Harvard Business School. He knows something
Oh, no.
about something. Yeah. Okay.
Oh, yeah. Okay. Well, by the way, I think that's a great idea to have the board review the Form 990
Yes.
before you send it in.
I think almost it's a requirement. I mean,
Yeah,
if
they
it's
actually have a fiduciary duty.
Yeah.
Their name is on it.
yeah,
So.
yeah.
Oh, well,
I've been through 10 of those. Yeah, they're fun.
no, yeah. Well, my name wasn't on it. So
Yeah. I had 10
But-
with my name on it. And I felt better. I mean, before I sent it off, we had a board review. We go ahead, Gene. I'm sorry to interrupt you.
yeah, well, that's interesting. Okay. Well, here in San Antonio, can you recommend some accounting firms that are experts in tax filing for nonprofits?
You know, I'd almost rather take that offline because I'm sure I will honestly forget somebody, but I'm more than happy to share names of firms that I've worked with on various organizations.
Whitney, may I say, maybe that's more of an offline conversation. What do you think? I can
I
get
just
you.
don't want to insult anybody that I forget.
No, I was going to say, would you be okay, Gene and Whitney? I'll trade your email addresses. That should be, I think, an offline conversation. That was like if you were to ask her to recommend fundraising consultants, you know? Gene, any other questions? John, any other questions at the moment? I got a couple more. Let me continue with this question. And if anybody in the audience, let us know if you want to either type in or better yet, join us on camera. Whitney, what steps can nonprofits, and most of our audience is smaller nonprofits that probably don't have financial expertise on staff, what can they do to rethink their budgets and to make do with less, you know, with the most immediate challenge of managing cash flow? But say they don't have somebody with a strong finance and accounting background.
Well, again, you know, number one, lean on your board, and you should probably always have at least one financial / investment person on your board, along with somebody who's legally focused, along with somebody who's more development focused. But definitely lean on your board there for some help. You can also reach out to organizations like the San Antonio Area Foundation that they have these resources. They have workshops, they have leadership workshops, but they have financial workshops as well. So there's lots of resources there, as well as with the Association of Fundraising Professionals. But I think maybe you may have alluded to this in another question, but you know, speaking of cash flow, it's also just finding ways that maybe you can leverage certain situations. Maybe it's even working with another nonprofit where y'all can share a back office resource like a bookkeeper, or even some of your IT, you know, outsourcing. Maybe it's a shared office space. So there's lots of ways that you can, you know, be creative, and especially coming out of the pandemic, where I think we've all learned that we're pretty flexible, and how we work these days is some of the costs that you've cut. Can you keep those costs where they are? Do you need as much office space as you think that you used to now that more people are working from home and will probably be able to do so more flexible in the future?
Whitney, for those nonprofits who are establishing an endowment, and I got to tell you, if you want to put a smile on my face, you mentioned the word endowment, because most of my work was getting scholarships, and I love the annual scholarships, but you never knew about next year. And endowments, I love the word, Whitney, perpetuity. They go on in perpetuity,
Great word.
which is a long time. So I've worked with you on this. What are the first steps for a nonprofit to develop an investment policy?
So first of all, you need to understand, you know, what are the true goals and objectives of the organization, and what is going to be the purpose of these funds, the use and purpose of these funds, you know, now and long into the future. And so without understanding those goals and objectives and purpose, you won't understand how you need to build out the asset allocation that's going to meet those goals, as well as to meet that spending policy. And then from an investment policy statement, I know that's a big word and a lot of people get a little bit nervous, but again, most of the people like myself, I've sat on a ton of investment committees, and so we're going to have access to a sample investment policy statement as a starting place for your organization. So that's one resource that you have right there. Again, as well as some of these, San Antonio Area Foundation and other places that can help with constructing an investment policy statement from scratch if you don't have one already.
We were talking about the nonprofits that were lucky enough to have an endowment. How about those that are lucky enough to have reserves? How can they best put them to work for 2021?
So the worst thing that people can do with reserves that we've seen is they may have a huge chunk of reserves that's just sitting in a checking account. So most likely you're not going to need these reserves all at once. I mean, hopefully it's there for a rainy day situation. And so you do want to keep them liquid. It's not necessarily part of your endowment where you want to take longer term risk, but you can what we call extend the maturity of some of these cash reserves that you have. So maybe you go 3 months out and 6 months out with CDs, and then even around up to 2 years with some shorter duration fixed income in order to enhance the yield on that cash. And with interest rates that basically zero, anything that you can do to just get a little bit more yield on those assets is beneficial. You can also shop your cash. So I've seen a lot of people, they have a relationship with the bank, but they haven't actually gone out there and shopped other banks. And so that's a good idea, every couple of years to go do. And it can also bring more, notoriety to your foundation or non-for-profit by meeting, other banks in the community.
Okay, before we test the waters for questions from the audience, I want to get back to endowments for a moment. And I love endowments. I'm sorry. Next to my wife and my cats, I love endowments. For those who are lucky enough to have endowments, how do you recommend they rethink asset allocation and also the payout, the distribution levels?
This is really important, especially in this day and age. So the 60-40 portfolio, we call it the 60% equity, 40% fixed income portfolio has really worked for a long time. It's actually been pretty hard to beat. But we're in an interesting situation nowadays where, frankly, equities are at all-time highs, and bond yields have been coming down for the past 30 years. And when bond yields come down, bond prices go up. So that's why the 60-40 has actually worked. But right now, interest rates on the 10-year treasury is, hovering around 80 basis points or so, back up from a low of 31. So you're not getting paid the yield on fixed income that you used to be able to make. And most likely we're going to be in a low interest rate environment for, the next 2 years. And after that, most likely we're going to see interest rates go back up, which means bond prices come down. And so thinking about the portfolio as where do we get income in a zero income type of environment? And so you have to be a little bit more creative with things like real estate and infrastructure and private credit, which is like the non-bank banking, in order to find income production in the portfolio that's going to work when, frankly, the equity markets may not be working as well as they did in the last couple of years.
Okay, I have plenty of questions. I want to check. John, do we have anybody in the audience who would like to place a question at this time?
And Jim, I forgot you asked about the spending policy as well, and I would just add.
Oh, I'm sorry.
No, it's okay. I would just add on to that. The other trend that we're seeing is just extending the calculation for that spending policy. So instead of looking at a rolling 3-year period on a quarterly basis to make your calculation, is extending that to 5 years. And this just creates a more conservative view and basically doesn't allow you to spend as much in case there was a short-term pop in the equity markets.
Thank you. John, do we have anybody else in the webinar audience that would like to share a question?
Not at this time, Jim.
Okay. I think we're teaching them too much, Whitney. This is good. Now, this
They're just bored out of their mind.
No, that was the first. They were teaching them so much. No, this one is really, as a former major gift officer, what should nonprofits know about the current mindset of high wealth individuals who typically look, who that's our primary audience for major gifts? And what will their mindset be about making longer term commitments?
Yeah, it's a great question. I mean, I think, people are individuals. So it's what I mainly deal with on a daily basis. So they really do span the gamut. But I think the hardest thing right now is it's been hard for all of us to wake up in the morning and think about the future, because every day is a brand new day. It feels like Groundhog's Day. So trying to get into the mindset that we're all sort of wondering what the future holds. I would definitely be sensitive to your donor base and understand, your donors' businesses and which ones may have been more adversely affected by the coronavirus than others. So, I wouldn't be going to your restaurateurs or maybe people that have clothing stores and asking for gift certificates for your next, auction. I would be sensitive to those types of things. And I think just getting people's mindset to look further into the future. So talk about, what your gift is going to do for programming in 3 to 5 years versus 6 months down the road. Because people are, I think, having a hard time thinking about 6 months down the road. So I think those were kind of good best practices to consider as you're making those asks.
I think we had some discussion of this before, but where, again, and I'm thinking about the smaller to mid-sized nonprofits, where can they go for affordable advice and counsel on financial matters?
I think we already mentioned the Area Foundation and the Association of Fundraising Professionals, but really it's people like me and my firm. So independent advisors will typically give, a fee concession in order to help non-for-profits and foundations when we're working with them.
And typically a nonprofit can put out a request for proposals, an RFP, and it can be a very competitive, even you can be a very choosy buyer.
Absolutely.
And what are your suggestions? Okay, then we have a little time. Everyone, it's going to be like a first date. Everyone's going to be on their best behavior. But what are your recommendations on finding a investment firm that's a good fit for your nonprofit?
Well, I think one, you want to look at, their expertise. Have they had experience in working with endowments and foundations before? So that's obviously, important. I think one of the other things that's important is, do they actually have real life experience? Like myself, I've sat on a lot of investment committees and finance committees. And so you want somebody that talks the talk and walks the walk. And also somebody that just really understands the foundation or endowment, personally, and understands what the mission is and has similar core values.
Mm-hmm. What lessons, history, we relive it, but what lessons do you think can be learned from the Great Recession of 08 and 09 with dealing with financial adversity?
I think that, the biggest lesson is don't panic. There's a lot of institutions that got into trouble because they panicked. They sold at the bottom or reduced risk, and their endowments have never recovered from where they were because of that. If you're going to have long-term investments, you've got to have a long-term time horizon. If you're investing in equities, you've got to have at least a 10-year time horizon. I think the other thing that we learned is to be creative. And I think that I've seen a lot of that in this pandemic as well. Doing sort of, in 2008, 2009, that's when we started seeing some of these, junior memberships. So trying to get younger people involved with organizations that may be a lower buy-in. You also can't expect to, necessarily receive those multi-year gifts. There were a lot of defaults, and there's still people trying to collect from 5-year commitments back in 2008 and 2009. So even when you do have those longer term multi-year gifts, you need to build in some contingency to that and make sure that even if worst case scenario you don't collect it all, you can still complete the mission. But even this year we've seen a drive-through zoo and online auctions with live entertainment, your gala dinner getting sent to your home. So I think that the creativity is going to continue, and especially with how technology has evolved, everybody's embracing that. And so I think we're finding new ways to fundraise.
Well, we're going to take about 10 minutes to kind of recap some major points. I'm going to bring you in and out of the conversation. But before we go there, I want to check on our audience. Maybe they all invested in Zoom last year, so they're sitting pretty. Anybody in the audience would like to share a question?
They're being mighty coy this week,
They
Jim.
are, but I got to. I'm not going to be coy. Actually, I've never asked this question before. I'm going to start and pick on Whitney because she's there to pick on. This is what I call my curveball. What is your favorite movie and why?
You know, I'm a big movie buff actually, and so this year has been quite depressing and not being able to go to the movies and see the big box office specials. But I'm gonna give you two because if I had to watch one movie for the rest of my life, it would be The Man from Snowy River. Great epic Australian Western with lots of horses. But for this year, given that it's been a strange year and it was a very short cycle of box office movies that came out, I would have to say the one for this year was The Hunt, because just like 2020, it really keeps you on your toes.
Yeah. I'm glad you didn't say Wall Street or the sequel. Okay, let's do a little, and by the way, the audience can come in at any time. We're right on schedule. Thank you, Whitney. Not only did you share very factual and full of meat information, you did it in a very timely manner. We're right on schedule. So if you join me, we're going to, I call it Jim's wrap up, remind some people. First of all, it has been an incredibly awesome year in the stock market. We're down just a little bit today, but yesterday we hit an all-time record, didn't we?
Yep.
And I don't know about you, I pinch myself every morning. And Jim Cramer is the second person I see after my wife. But he's a real shy guy, isn't he?
Yes, he is.
And one of the things that's so important to be talking to people like Whitney, we know this from history. Nothing is an indicator of philanthropy like the stock market. And the stock market is held firm. And Whitney, we're seeing several signs. Actually, there was something called the Fundraising Effectiveness Project. You mentioned the Association of Fundraising Professionals. And at the halfway point, gift income, according to that, was up 7.5%. Okay, that was in July. And so not only are people with resources still have resources, but Americans historically respond to times of great need. And certainly those are the times. For what 2020, you mentioned the crystal ball. There's Whitney's crystal ball. You were very sage-like and you were non-committal, but I interpreted it a little more positive than negative.
Yeah, and again, we think that the economy will continue to recover. We don't think you'll see necessarily the performance in the indices that we've seen, because again, those larger technology communication services, securities that make up a large portion of those indices will probably not be as much of a driver, but there's lots of smaller mid-cap companies that are sure to do better in 2021, as well as some of the cyclical names that we've seen. But longer term, it does look to be a little bit more difficult road to haul in the equity markets. Even our long-term capital market projections are closer to 5-6% for domestic equities. So it's definitely coming down, which again goes back to that 60-40 portfolio and reconsidering your asset allocation.
We talked about the election, and the reaction was fairly, I think the market was saying it could work with a President Trump and it can sure work with a President Biden. And on January 5th, we'll find out who has control of the Senate. But the reaction to the reelection has been fairly a non-reaction, really. It just continues to keep on humming. You said really more is always better, but nonprofits really, this is the time you're reminded you need 6 months of reserves. You should budget for 6 months of reserves, and you can fundraise for 6 months of reserves, because if anything, we've learned anything, it's to expect the unexpected. And that's it. Who knows what the unexpected could be? And those that are making it have reserves and they have endowments. Getting out of trouble. Uh, you reminded us of, I love what you said. Number one, get the board involved. If you got problems, they should be the first to know. And they, as Whitney pointed out, they might be the first to have some solutions. You might have some board members who have accounting and financial management and money experience. And the other is, I didn't pay Whitney to say it, but invest in fundraising. And I have all sorts of statistics. One was something like for every $1,000 invested in a major gifts program. Okay, that's not working. That's not working. That's concentrating on high wealth individuals, not corporations or foundations. It was a 37-to-1 return. You know, that's where, again, we saw that pie. 68% of philanthropy comes from individuals, and you cannot beat investing in fundraising. Benchmarks, I'll let you reinforce this, Whitney, talking about surpluses and how to cut expenses.
Yeah, cut expenses. And again, like I said, we've all, I think, cut expenses across all of our businesses this year, and reconsidering, are any of those expenses really need to come back? And especially, I think office space is one thing that people sort of have on the chopping block, or consider sharing office space.
Mm-hmm. Another is, if you want more than 6 months, talk a little about stretching your reserves.
So yes, again, just remember that you can extend the duration of some of the cash that you have on hold in order to enhance the yield. So don't be afraid to extend your duration a bit.
And I would echo too. I've had event planners on this. This is the time to be creative. And the beauty of a virtual event, Whitney, your expenses are almost nil. I'm not going to buy you a rubber chicken. I'm not even going to pour you a glass of wine. We're hearing from many nonprofits who were very creative and very robust in their events this fall, and they actually made more money than in 2019 because their expenses were cut to almost nothing.
Yeah, and I would also add to that, which I didn't mention earlier, but make sure you're asking your donors to go back to their corporations and ask for matching dollars this year, because a lot of those corporations didn't spend as much on charity this year. They weren't buying those corporate tables at events, and so they probably still have some money in their coffers.
That is a great suggestion. Can I have your permission to say it was my idea? I love that. You
Sure.
reminded me.
Take it and run.
Yeah, I am. And again, folks, this is, if there was a time to get through stocks because they are at all-time highs and expectation and tax policy, this is the time. And could you amplify in that for a moment?
Yeah, just again, we may not see it in 2021, but most likely 2022, we will see an increase in long-term gains tax. And so this is a great way to stretch your donor's dollar further. Don't let them pay taxes. You can get more dollars from them in kind from the stocks.
Endowments, we're talking, this is a great time to rethink asset allocation and also spending policies, right?
Mm-hmm. Yep, extending that calculation on your spending policy.
Mm-hmm. Mm-hmm.
Jim, Gene has another question here. I'm going to bring him back on.
Okay, Gene. Harvard guys are allowed on a second time.
Hello again. Regarding financial oversight, what do you think of giving the board the bank statement itself, say monthly? Or
Yeah, I think depends on the size of your organization, whether it's the bank state or maybe that's just going to the finance committee. It just depends on how big your board and or if you have additional committees. But I do think it's very important. I mean, I think that's actually the number one position, the head of an investment person. It's a finance person that is going to be, checks and balancing, having an ongoing conversation with whomever is in charge of doing the books, because without having, an audit of some sort there and checks and balances, that you're not going to get that donor. They need to know that their funds are being appropriated correctly.
Good question, Janie. High wealth individuals, again, who drive, I have another pie chart. The 80-20 rule, that 20% of the outcomes come from 80%, no, 80% of the outcomes come from 20% of the inputs. That used to be apply to gift income, and now it's 88 and 12. That means that 80% of philanthropy comes from 12% of donors. So what should we know about what our high wealth individual is thinking right now and for the future?
Again, be sensitive to whatever their business may be. But obviously, again, if they're, a high net worth person that may have a large investment portfolio, again, that's a great way to talk about longer term planning, estate planning, and how they might be able to gift, whether through their will or, again, like we said, through gifts of stock.
And we said whether you're in a great situation or a less than a great situation, be completely transparent and engage the board on a timely basis. We said there were lessons learned from the recession of 08 and 09, and in many ways, philanthropy and the economy is rebounding more quickly from COVID than it did from the Great Recession. Whitney's golden nuggets. Again, she would actually probably like to see you 6 to 12 months in operating reserves, and think not about next month, about next year. Sometimes think 3 to 5 years, and think long term. Think, how are you going to have the resources to provide support to those you help, and for staffing and programs long term. This is a time to rethink your investment strategies. You said before, don't panic, stay positive. There's a lot to stay positive about. Now I'm going to my final messages. We have a few minutes. I'm saying on the fundraising hat, don't take your foot off the gas pedal. Donors are ready to give. Tell your story and ask them. Another thing I learned, and I have gray hair, Whitney will get gray hair in the future, but starting is more important than perfection. You're probably never going to have perfection, and you're much better asking for money rather than waiting for the perfect opportunity. Okay, so just move forward. And that's what your board and staff is there to make decisions, to focus on your essentials. And if you were to simplify what our job in fundraising, inspire donors about what their gift dollars would do. Okay, tell the story. Philanthropy unites us. It brings out the best in us. And one of my favorite quotes is from Maya Angelou, the great poet, who said that people will not remember what you said. They will not remember even what you did. They will never forget how you made them feel. And our job in fundraising and nonprofits is to make that donor feel like they are the most important person in the world. Okay, it's that simple or that hard. This is something I picked up, I forget where, last week, the old 2 ears and 1 mouth. I love this. You don't learn anything when you talk. So, when you're listening to your board members, your donors, your prospective donors, you're going to learn. Okay, believe me, and I'm guilty here. You don't learn anything when you talk. Think about that one. But I will give you a money guarantee, Whitney. The more you ask, the more gifts you're going to get. So the only bad ask is the ask never made. And I like to close with this quote. What JFK said at the commencement address at American University on June 10th, 1963. And it gives me goosebumps because I think he's speaking to us right now about our most basic common link is that we all inhabit the same small planet. We all breathe the same air. We all cherish our children's future. We're all mortal. I think that JFK was speaking to us right here and now. I'd like to thank Whitney Solcher, who shared so much wisdom and practical advice. And thank you. You know, a lot of people in my next life, I'm going to take more finance and accounting. But I like the way you made it so user friendly and we were able to understand everything you said. So thank you for your time. And we
Well,
look
thank you.
forward to this continued relationship. And John, thank you again. This was number 35.
Thank you.
Whitney, I can tell you, number one, this wasn't perfect, but you were lucky to be at 35 and not number one. So number one wasn't that bad. So we should have, by 6 to 6:30, we will post the recording and slides. We're going to post a short written summary right now. Finally, to our Jewish friends, I want to wish you a happy Hanukkah. It starts tomorrow at sundown. My wife is making something called potato luckies, okay? And so that's the priority in the Eskin household. And we want to wish everybody health, safety, and again, be safe. Be safe, and we'll see you in a few weeks. Whitney, this was absolutely splendid.
Thank you. My pleasure. I appreciate the
I-
opportunity.
I could even understand you. And again, you do want to see my grades in accounting. So thank you, and continued good health and success to Outreach Investment Consultants. And thank you for your service to the community. Thank you to our learning community of executive directors and staff and board members. And our next webinar won't be next week, but it'll be on Wednesday, December 23rd. So everyone stay safe, and thank you and good night.
Great. Thank you.
Whitney, the time just rolled by.